This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, so let's go through, finish everything off with the final example that we have here on the statement of changes in equity, whereby, quite conveniently, it wants us to prepare a statement of changes in equity for the year ended the 31st of December 2017. So it's really important to note the dates, because December 2017 is the end of the year. Therefore, the 1st of January 2017 is the start of the year, and therefore our opening figures. Okay, so what we've got there, we can see right at the very top, we're given extracts from the accounts from December 2017. We're told the profit for the year is 421. We're told the dividend, a deduction from our retained earnings, is 98. So those two figures there, both of those are going to go to our statement of changes in equity, and specifically they will go within the retained earnings column. So I'll put those in a moment. We're given also some information with regards to what also took place. So it says properties were revalued by $105,000. So that will go through other components of equity, won't it? It's some form of other comprehensive income. That other comprehensive income will go through there and feed into your other components of equity. Pardon me. There's 200,000 equity shares of $1 issued at a premium. So we have an issue of shares. Therefore, we will need to go through there and see what we're going to credit share capital with, and credit share premium. Okay, you can possibly do that for now. Okay, do it by yourself if you want. I will do it in a moment, so fear not. And then the most important bit, I think, at the start, it is getting the opening balances. So they're usually pretty straightforward, so easy to get within the exam, and it helps you with, careful, I had to throw my pen on the floor, the excitement of doing the example. You've got those opening balances, which is effectively giving you the headings that you need for, is it your statement of change in equity. Okay, so you can see there, issued share capital, share premium, other components of equity, and your retained earnings. Okay, so let's put it up. It's usually best to turn your page landscape when you're doing the questions at home. You'll be able to fit it in on the computer-based exam on the sheets that you're given there. Okay, so what we've got, I haven't spotted any prior year errors, so I'm quite happy there that I don't need to put in any adjustments. So I'm going to try and squeeze it all in. I've got share capital, I've got share premium, I've got my retained earnings, and then what I'm going to do, you can call it other components of equity, but I suppose given that we've got a separate column for share premium and revaluation should be merged together as other components of equity, but I'll just keep them separate. Okay, share premium, revaluation, and then is it your total. Okay, so easy figures that you've got there are just copying these balances as you brought forwards. Okay, so again, I'll keep it simple. I'll work in hundreds of thousands. So share capital is 400, share premium, I think, was it there, is 50. Retained earnings is 310. Revaluation is 165. If you have the time and can be bothered, I think that gives you 925. Okay. That's all pretty easy, and I suppose is what you should be doing first, isn't it? Okay. Then don't worry about how things are ordered and structured as you go down the page. Just get the easier bits first. So I'm looking at my profit. The profit that you had, was it there, 421. I can put that in as a total. The dividends are there as 98. If you don't put the dividends in brackets, criminal. Okay, imagine you got 49 in the exam. You're like, oh, what mistake did I make? Oh no, I didn't put the dividends in brackets to show that it is a reduction in the earnings. Okay, Again, the easier figures tend to be the figures that you can copy across. So you've got your evaluation. Was that there as 105? Again, you can put in the total. And it seems to be so far so good, doesn't it? I've dealt with all of the brought forward figures. I then dealt with the profit and the dividend. I then dealt with the property, and now I've got there is it the 200,000 equity shares of $1. So that there is the par value. So the share capital will be 200, won't it? 200,000 multiplied by 1 is 200,000. And then you've got the premium. Okay, so premium is above the par value. So that there is 0.25 multiplied by the 200,000. So does that go through there and give you 50? So a credit to share capital increases share capital. A credit to share premium increases share premium. Do just be careful if you have a bonus issue. Credit share capital, debit share premium. That debit to share premium would reduce the share premium balance. But here it's a rights issue of shares above par value. So what we've got there. So share issue. Is it in the share capital? 200. Share premium is there as another 50. So that's increased my reserves in total by the 250. Okay. Then what you do, finish off, total it all up. You don't actually get any credit for totaling it all up. I believe that you should, but there we go. So 600, 100. Get your calculator out, check. I think I've got it scribbled down, but I can't read it properly. Is that 633? I'm sure you'll tell me on the forum if I'm wrong. You've then got the revaluation of 270, and then hopefully it adds across, it adds down. Is it 1603? Okay. Again, bits and pieces. Remember, in the exam, use your own figure for your profit, your own figure for your evaluation. Obviously, they were given to us in this example, but remember, the way in which it gets examined as a section C is that it's maybe a part B or C, and in the earlier part, you've had to prepare either a statement of financial position, a statement of profit or loss. So those figures that you have from the SFP or profit or loss are going to feed through. Okay. Again, you carry forward figures if that's what you have from the SFP. And just use your own figures. It doesn't matter if it doesn't balance. Okay. And again, it's anything between 3-4 marks within the exam. Neglect it at your peril. Okay. There's easy marks, such as the dividends. Make sure that you put it in brackets, because if you don't, oh, yeah, you get it. It's crazy. Okay. Yeah, it's a reduction in your earnings, as it is a distribution of those profits. Think you've got the idea? Yeah, you just need to now remember that for when you're answering any of those questions in the future. So, good luck.